Cathie Wood. Avoid disinvesting mistakes at all cost. When it comes to investing, there are a lot of things that can go wrong, and if you're not careful, you could end up making some costly mistakes. Hello guys, and welcome back to the channel. In this video, Wood shares some of the most common investing mistakes that people make, and she explains why you should avoid them at all cost. That's why it's important to learn from the best in the business, and one person who definitely knows a thing or two about investing is Cathie Wood. Firstly, your holdings are not sufficiently diverse. When the bull market was in full swing for much of 2020 and 2021, many investors sought out funds that had recently performed well, such as Cathie Wood's Arka Innovation ETF. People adored Cathie Wood, and that was all they purchased. And they believe they are diversified because they purchased one ETF. How stupid can you get? The difficulty, points out Orman, is that while funds like Wood's own a range of equities, the portfolio is still a rather restricted one based around a certain topic. When that particular segment of the market suffers, as it has recently, the ETF in question is down 56% from its peak in February. Your portfolio may suffer. According to Orman, given recent market swings, it is even more important to spread your bets across funds that have exposure to a diverse range of asset classes. You need diversification in your portfolio, especially in these times, she advises. Otherwise, you'll find yourself down 80%. And remember, going from 100 to 50 is a 50% loss. It is a 100% gain to go from something to 50 and back to 100. So don't be a dunce. Moving forward, you do not invest during downturns. If you've been seeing red numbers in your portfolio, you might be tempted to put your investments on hold until things settle down. However, if you are a young investor who is decades away from retirement, avoiding a declining market is a huge mistake, according to Orman. You want the market to fall, she explained. If you're 35, you don't want to be pouring money into something that is already really high. When markets are in a downturn, it might be intimidating to invest additional money. However, by spending a specific amount of money at regular periods, a technique known as dollar cost averaging, you might be rewarded in the long run for continuing to purchase stocks while they are on sale. When mutual fund shares fall in value, your money buys additional shares. Long term, the more shares you own, the more money you will have when the markets rise again. One simple approach to implement this plan is to request that your company send money from each paycheck to a workplace retirement account, such as a 401k. Many such programs provide a matching contribution to employers who save via the plan, which, Orman says, is a benefit that should not be overlooked just because markets are down. You're a complete moron if you stress out when markets fall, she adds. You're a double idiot if your company matches your donation. An idiot twice over. Lastly, you are not using a Roth IRA. Retirement savings accounts, such as 401ks and IRAs, are divided into two types, regular and Roth. Traditional accounts provide an upfront tax break. Money contributed to them may be deducted from your taxable income for the year in which the contribution is made. In return for the tax benefits, you will have to pay tax on any money withdrawn from the account in retirement. If you withdraw the money before the age of 59, you will owe tax plus a 10% penalty. Roth accounts function in the other direction. You fund these accounts with money that has already been taxed, but you enjoy the tax benefit afterwards. Money withdrawn beyond the age of 59 is tax-free if you've owned the account for at least 5 years. Furthermore, regardless of your age or how long the account has been open, you may withdraw up the amount you've contributed at any moment without incurring taxes or penalties. Well, that's all for today. In case you've enjoyed today's video, kindly like and subscribe to the channel.